What's up, guys? Welcome back to Road to the 2 Comic Club. Justin here, and this is going to be a 2-day recap again for May 29th and May 30th. So let's just get into it and try to keep it as short as possible, but there is a decent amount to talk about, so I'm going to do my best. So first of all, the Dow did very poorly on the 29th. Dropped 392 points. The NASDAQ dropped 37 points. I'll show, the widget as I do. However, Tesla and Universal Display did end up with a pretty solid day, so that was pretty awesome. I did sell, so Monday the 28th was a holiday, so 29th was the first day of the week. I did sell another OLED Universal Display covered call, so I went a little lower with the strike. It was trading at, it was trading at $107.50 at the time. I went with a $115 strike, and I ended up getting $42.33 after the fee. So a little bit more than what I've been getting. So I was pretty happy with that. I'm not trying to be greedy with them. I'm trying to, go high so that I can have a good chance of it finishing out of the money. But with Universal Display not doing a whole lot, I figured I can go a little bit lower, increase my profits a little bit while still trying to, keep that gap so I can keep my shares. So that's what I did. So we'll see if what Universal Display does by the end of the week, whether or not we will keep our shares or not. Okay, so now there was some big news today with Italy, and I just heard about it. It wasn't even on my radar. It just kind of popped up as a news article, and I was like, I wasn't really paying attention because I was editing and stuff, and I was like, what's going on with Italy? And my first reaction was, I can't imagine them having a huge impact on our markets. Just my gut feeling is telling me that they're not it's not going to be the hugest deal in the grand scheme of things. I'm saying to myself, watch tomorrow. The headlines will say the market will bounce back, and the market will say or the articles will say, fears of Italy ebb, like that word they always love to use. That's just my prediction. So from what happened, and then we'll get back to that later. But so I'm going to post a few articles about that. By the time you're seeing this, it already came and went. I don't know what the current update is with that. So if you want to research it on your own, you can. But this has kind of been out of the news probably by the time you're seeing this for a while. So yeah, so if you want to check out that, I'll post some links in the description. But one of the headlines was world stocks fall for 6th day, but Italy, Euro, and mini bounce. And then another one, why Italy's crisis could be a buying opportunity for stock investors. So that's a good article to read. The other one was bank shares pummeled as Italy's political turmoil sparks government bond sell-off, and why U.S. market fell after Trump canceled the North Korea summit. So these are all kind of old news by the time you're watching this, so I'll just post links in the description just in case you want to look at them. But the article that did catch my attention that I want to talk about for May 29th was this headline that said, "Trillions of reasons why a huge storm may be looming for investors in one chart." Now, I'm going to post a link in the description. Definitely click on this one and look at that chart because it talks about the credit. Let me see. I wrote it down here. Like the credit cash accounts plus the credit balances and margin accounts and margin debt. And basically, and I didn't really realize this, but apparently a lot of people will, borrow money and use their stock portfolio as the collateral. Like they're borrowing against their stock portfolio. And I'm wondering if that's, and maybe some of you guys will know this if you read this article, but I think they're talking about basically margin. So when they say, how much credit is currently being borrowed against stock portfolios, that could mean just margin, like trading on margin, which is something I'd have done. And I started doing that in 2016. And if you're new to the channel and don't know what margin is, it's essentially you're borrowing money from the broker you're trading with based on how much money you have, and they'll give you money to use to buy more stocks with, so you have more buying power. And it kind of makes sense that that's what it is, but maybe there's some more to it that I don't know. I'm not an expert on that, but anyways, if you look at the chart, it shows how the credit had a big negative balance on average right before the dot-com bubble, and then again right before the recession in 2008. And if you look at the negative credit balance that's currently happening right now, it is tremendously larger than the prior two instances where we had a recession. So it's really scary that I look at that. It makes me think that we could be coming for a big recession soon. But at the same time, we have the solid economy and solid earnings kind of warding that off. So it's kind of really a risky balancing act that's happening right now. I wouldn't recommend borrowing a lot of money. Like, yeah, stocks are doing well and you can maximize profits by borrowing more money to buy more stocks and make more profits. But at the same time, you don't want to be relying on that, in my personal opinion. And in fact, if you watch my vlog from the very beginning, you'll see I did carry a pretty large negative balance for a while. Like, I think I had at one point, I was using like $30,000 of Scottrade's money, so I was borrowing that. But as my account grew, I tried to use less and less of their money, and eventually my margin balance went green and I didn't owe them any more money. So that's how I've been trying to do that. I do not want to borrow anymore. I'm comfortable with the size of my portfolio now and just using my own money. But anyways, that's a really worthwhile article to look at. And let's just keep moving on. There was a positive article that I'm going to post a link to, also called Consumer Confidence Index rises to 128 in May versus April's 125.6. So I'll post a link in the description. You can look at that because it's kind of an older article by now, but it's still a good one to look at. I forgot to mention how the stocks did. So our winners and losers, we had Red Hat, Universal Display, the call and the stock both went up, so that was awesome. And then Micron, Intel, and Square were our top performers. And then our losers I'll post screenshots of how the other stocks did, so you can see how mostly options, as you guys have known if you're watching my channel. Most of my positions are options right now. But our losers, our worst performers, were Boeing, Domino's Pizza, Disney, Amazon, Take-Two. And again, I have to check with the prior day to see if any of those actually did change, but I don't always have time to do that. I just kind of forget about it. So I just kind of look at it and just assume that that's right. But anyways, now let's move on to May 30th. Now, I didn't actually take screenshots of my stock portfolio. I totally forgot, so I apologize for that. But I did the math. We did make $3,800 about, so we closed at $169,538.51. So we did have a good day, and I'll post how the stocks did. And sure enough, I was talking about how the Italy thing wasn't going to be a huge deal. My gut feeling told me it wasn't. And sure enough, the next day, the first headline I saw said, Asia stocks bounce, Euro pulls off lows as Italy anxiety ebbs. Like literally that word that I was predicting would be in the headlines was, and it was just a deja vu moment for me. That's why I kind of felt like it was going to happen. Another headline said stocks rebound as Italy fears ebb. Kramer, and then 5 reasons the stock market rebounded, another one. And the other one was after the bell, Dow gains 306 points as yesterday seemed so far away. So yeah, it just kind of, I was kind of anticipating that this wasn't going to be a huge deal and it would kind of blow over relatively quickly, and it did. So that kind of just comes with just seeing these events happen, and you kind of have like a backlog of history in your brain that kind of you can pull off of when you see stuff like this happen. And had I trusted my gut more, I would have tried to find a way to buy more stuff yesterday and then try to ride that wave today, but I just didn't really do it. I always doubt myself. I always second guess myself. Even though my gut told me this was going to happen, I didn't act on it. So it's hard though. It's scary. When you're investing, it's scary to put your money where your mouth is. It's easy to say, oh yeah, stocks are going to be fine tomorrow. But it's like, yeah, well, are you going to start buying stuff today? And you're like, I don't know. So it's like, I think everyone has that issue. But it's just one of those things that you do when you're trading. If you can trust your gut though, and just operate like a computer, and if you see something like an opportunity and you jump on it, I think you could be very successful doing that. That's just my personal opinion, not a financial advisor. But anyways, let's go to the articles. The really big things were NVIDIA. They launched this colossal HGX2 cloud server to power high power computing and AI. This stuff is way over my head in terms of the details, so I'm going to post a link in the description. I keep saying that, but read that article. It's very interesting if you kind of missed this piece of news. And then the other article was about Intel versus NVIDIA, the future of AI chips still evolving. That's another good article. I kind of skimmed it, but I didn't read all of it. But it does talk about this conference that someone was going to, and people from Intel, NVIDIA, and some other startups were there. kind of talking about the future of chip technology, and it's very, very interesting. I definitely would recommend reading that one. I know a lot of you probably did miss it because it wasn't really a huge headline, but just definitely give that a check out if you can. This was a good article. It was called Bet on NVIDIA, Amazon, and Tesla, not Italy. I really like this article. This is also two reasons I like this article. It's short, so it's easy to read, easy to consume, but it brings up really good points, and especially because I agree with it, so I guess maybe that's why I like it. But the point of it is there's kind of a couple ways you can assess your risk when you're investing. You could either try to hedge your market risks, or you can I'm trying to summarize how it's said, but he says you can have market risks and company specific risks. So market risks are basically anything that can move the market, like geopolitical stuff, anything like news related, like outside forces that can affect the market. Those are market risks. Company specific risks are just risks that are within the control of the company. And what he was saying was, if you invest in companies you truly believe in and research, even if the market's doing poorly, the stocks that you pick could do very well. And it can kind of ignore those market risks and they kind of do their own thing. And some good examples that he brought up was NVIDIA. So he says NVIDIA is a good example of this. It said it's the 32nd largest position in the S&P 500 at 0.63%. So because it's such a small percentage of the S&P, it hardly matters whether the company succeeds or fails if you're investing in ETFs or market risk type of things, because if you're investing in the overall market, S&P ETFs or whatever, that company could do bad and you're still not really losing much. On the flip side, in the past 12 months, this is as of May 29th, NVIDIA is up 143%, while the S&P is only up 11%. So that kind of shows a positive impact that exposing yourself to only the company-specific risks can have on your portfolio when they do work out in your favor. So that's what he said in this article, and that's kind of how I personally invest. I mean, you can lower your risk by, and I've done this before, by buying puts on an ETF that kind of hedge against the market risks. But there's other things you can do, and I'm not an expert by any means, but I like to diversify a little bit. However, I'm a little bit more aggressive, I think, overall. And so I like to kind of pick the companies I really believe in, and I try to just invest in those specific companies as opposed to putting more money in broader ETFs and stuff like that. So that's a good article. You don't have to agree with it, but it kind of gives you a different perspective. And I really do recommend that article. I really like that one. And it also talks about Amazon and Tesla as well. So let's go to the last article that I'm going to talk about. So this is about Tesla. Speaking of Tesla, the Model S on autopilot crashes into a parked police vehicle in Laguna Beach. This was kind of more of a funnier article. No one got hurt, that's why I'm saying it's funny. But it is kind of interesting how autopilot is crashing into parked cars. But luckily, no one was injured. And it does talk about how, I think some people, they rely on autopilot a little too much. When you have autopilot on, you still need to have your hands on the wheel. You really do need to be paying attention. Because it's in the early phases, stuff can happen. It's not fully autonomous yet. So I think that's something that people forget. But the other articles were talking about Consumer Reports thought a Tesla took too long to stop. And there's this whole thing about Consumer Reports did this stop test on I think it was an older Tesla anyways. But it found that it was taking too long to stop. And this is why I love Tesla though, because Tesla caught wind of this. Elon Musk caught wind of it. And they immediately pushed out an update. So this other headline says Consumer Reports recommends the Tesla's Model 3 after the braking fix, and Tesla Inc. improves Model 3 braking by 19 feet with a software update. That's honestly one of the best things about Teslas is they can improve the cars with software updates. So your car can literally be sitting in your garage and it can be better the next day as you get into it, as opposed to, let's say there's a braking recall on your regular car. You have to go to the dealership, then you have to get in line, and then they have to fix it, and you have to wait, and then they give it to you, and you end up wasting a lot of time. And even though if it's a recall, you don't have to pay for it, it's still a big hassle. Whereas something like this, you could be sleeping and they'll push an update and fix the issue, and they do this and they respond so quickly. Elon Musk is so good at, talking to his customers and seeing what's wrong with the cars and what can be fixed. and then he works quick. Like his team works fast to fix those issues, and that's one of the biggest reasons I like Tesla as a company, is just how fast they respond to issues like that. And that's pretty much it. We're gonna leave it at that. I hope you guys liked this video. If you did, please hit that like button and subscribe if you haven't already, and leave a comment below if you have any opinions on Tesla or the Italy situation, what you think is going to happen. And yeah, I would love to talk to you guys. So thanks again so much for watching. Hope you have a good night. We'll see you tomorrow.